Oh yeah, I need my other computer. Let's see, usually. Okay, the link's up. And I need to good?
Yep.
I can't see myself.
There's just a little lag.
What's going on, everybody? Let me know if you can hear me in the comment section. All right, thank you, Carol. I appreciate you guys being here today. This is a big one for us. I'm going to make a couple announcements today. I'm going to share some good information and kind of give you guys a good update. I felt like in the email I sent out, I tried to promote it as the most important one that we were going to have. So I feel like I need to come through for you guys today. And I think you'll be happy with what we end up having. Feel free as we go throughout this webinar to post in the thread. If you have any questions specifically that you're looking to get answered, I'm happy to answer those today. The primary focus of what we're doing today is going to be tax planning and kind of how that works and why it's so important and all that sort of stuff. If any of you have done tax planning with me or with your CPA in the past, you'll understand that is where value truly is. And that is where we get the opportunity to make sure that you're compliant. We get the opportunity to make sure that you're doing all the things that you need to be doing. And this truly is where the magic happens. I hear it all throughout the year where everybody will say to me something along the lines of, Ronnie, I'm really going to need you to work your magic when it comes to my tax situation. And this is where it happens. I don't know how else to emphasize that to my client base, but if you're here today, if you're listening to this, then you get it. You understand. And I think in the end, you're going to be somebody that gets value out of spending this time and showing that accountability. So when I do tax planning, what I end up doing is first calculating out where you're at if you did nothing. If you were to just say, I don't want to implement anything before the end of the year, I will calculate your numbers. I have a planning software where we'll go through, usually I'll pull in some of the information that you have. Maybe you have books through October, or maybe you have year-to-date investment statements and different things like that. And we'll go through and just pop those numbers into my software. Once we go into the software, it kind of gives me an idea of what tax bracket you're going to be in, how much tax you're possibly going to owe come April. And then we kind of work backwards from there. It's like, let me go through some ideas that I have for you. And then once we go through those ideas, you could say, yay, nay, no, I don't want to do that, or I'll just pay my balance in April. And so those are kind of the situations that we end up having. But calculate is such an important principle. Just making sure that you know where you are is so key to creating a tax plan. And even if you're in a situation where you're going to owe a lot of money or something along those lines, if you know that in November, then you have 6 months to save up for it. Or maybe you make a bigger estimated payment in January and avoid some possible penalties that you may have. There's different things like that make this time worth it. And so I'm grateful. I'm grateful that you're joining me today. And I'm grateful to be able to outline what tax planning looks like this year. It is going to be just a tiny bit different, but I want to emphasize that a couple things. My firm it's growing, and a lot of the reason that it grows is because a lot of you guys send referrals and that sort of thing, and we do a good job. And so this fall, we're really implementing a couple things that are going to help me serve this client base much better and much more effectively. I think I kind of ran into a little realization this year that I've kind of got to a point where maybe I stretched myself a little bit too thin, and I just kind of started thinking, how can I improve the quality of service that I end up giving to my clients? So there's going to be a couple things, and I haven't really announced this over a mass email yet. These types of things are coming out, and I'll expound upon them. But I'm doing a couple things. Number one, I'm bringing on somebody that is going to be a consultant. It's going to be a business management consultant that is going to help out with things like entity formation. We're going to do some new interesting things like compensation studies. We're going to consult on some different things like sales tax and payroll and bookkeeping and conservation easements and cost segregations. There's a lot of these types of things that I haven't really focused on a ton, but are really, really important within your businesses. And sometimes when you get into the grind of I have to file 800 tax returns and 100 of you guys gave me your stuff, 7 days before the deadline, it really takes me away from some of the things that really, really bring value. So one of the most important things that I'm going to do this fall is bring on a business consultant that is going to help take some of that and help this client base with a lot of the things that there's needs with. And so that's something that's really cool and exciting that's coming. Another thing that I'm doing is bringing a lot of you guys will know Emily, Doc, and I. She is somebody that's worked with me for 8 years. I hired her out of college. She became a CPA with me. She goes all the way back to the Anderson days. She is taking a more active role as a quote-unquote partner. And so that is something that is also going to be able to help us help this client base and be more responsive, more active in working on the things that are really important. And so those are two major announcements that I want to make that I'm going to expound upon further. But the future of my company and what we are going to be doing lies a lot in what we're doing right now, which is consulting and making sure that we're available in areas that are really, really important on top of tax compliance. Tax compliance is not getting pushed by the wayside or anything like that. It still is going to be the bread and butter of what we do. But over the last 6 months, Prosperity Society has been something that I've kind of slow rolled. There's 20 videos on the site. 20 of you guys have signed up for it and have possibly looked at some of those videos. But there really is kind of a chicken and the egg type of thing here that I'm looking for, where I really want to pull in a lot of my client base to come into this so that I can continue to push more and more video content, more and more training. The IRS is hiring 87,000 new agents, as you're well aware of. We've had a lot of these conversations with a lot of you guys. And where I'm at with this is compliance becomes more important than ever. What we always want is, if we ever are pulled for audit, we want to have all our ducks in a row so that the audit goes smooth. And a lot of the things that are in my tax prep process make that available. But there are some tweaks that we've recognized that we can make. And so compliance becomes very, very important. And so it's one of those things that I want to make sure that I'm always feeding. I want to always be talking about compliance. I want to make sure that I'm giving, not just monthly updates through email. I would love to be within Prosperity Society giving weekly updates on various things that we're seeing within the profession. And so you're kind of, hopefully getting the vision here where I'm like, okay, I want compliance. I want people to be educated when it comes to what they need to be doing within their tax plan. And for the most part, I'm really trying to guide a lot of people into moving into this platform that we've been kind of creating called the Prosperity Society. I'm going to be focusing a lot on the compliance and the tax planning and that sort of stuff. Our business consultant, Brian, is going to be focusing a lot on partnership type stuff, managerial type stuff within your business, tech solutions that you could be implementing within your business if that's something that you want to be doing. and putting some emphasis and focus on some of maybe the skills that are out there in running and managing your business. And so when you kind of put all that together, you kind of start to see the formation and the foundation of what we really see as the Prosperity Society. And so if you haven't signed up for that, I'm going to emphasize that you do. And that's kind of like from an announcement, housekeeping, from a, here's what we're thinking, this is where we're going type of thing. That is kind of what I wanted to introduce to you today, as far as kind of this being important to me and important to, how I can best run my practice going forward. I think it's going to be great for everybody, and I think there's going to be better service. I think there'll be better quality tax returns. There's going to be less fear that we need to have when it comes to being audited. So, let me know what you think about that. I'd love to hear your feedback through email. I'd love to hear your feedback just even in the chat if you want to go there. But, I hope that you're catching the vision. I hope I've done a good job giving you guys the vision of what we're trying to accomplish and how we really build this firm out and going forward. All right, so before I jump into a couple items, let me get this question here. We purchased a vehicle and SUV this year, which we partially use for business. Travel to our short-term rentals. Please comment regarding Section 179 usage for depreciation this year. Thank you. All right, Section 179 has kind of been something that's a little bit ancient as far as how we write off vehicles and take depreciation expense. Over the past few years, bonus depreciation has been something that is very available and easier to take than Section 179. 179 is not gone and dead, but when it comes to expensing your vehicle, the key element of vehicle expensing is to keep a mileage log. I need to have what your personal breakdown is, where you're using it yourself for your own family and different things like that, versus when you're going to your short-term rentals. So just for round numbers, if you drove it 10,000 miles this year and 5,000 was for business, 5,000 was for personal, then you're going to have the opportunity to write off up to 50% of your car. The personal portion won't be deductible. But when it comes down to the SUV, there is bonus depreciation available. There is some Section 179. Depending on how much you spent on the SUV, you're probably going to get to write most of that 50% off, if not all of it. So, I would have a couple questions for you on what type of SUV it is to see what it qualifies for and that sort of stuff. But a vehicle expense is a great deduction when it comes to using it for your business. So great question. That's a question that I get quite a bit. And what I can't emphasize enough, though, is making sure that you have a mileage log. And so many people do not have a mileage log. The overwhelming majority have a hard time keeping a mileage log, I would say. But if you were to ever get audited, the IRS, the first thing they're going to ask for is, let me see your mileage log. And they will also say, don't mess with us and try to create a mileage log right now, on a piece of paper or something like that. You have to have a mileage log at the time that you keep it. So just something to focus on. I ended up going through it. Let me tell you this really quick. I ended up going through an audit recently, and I spoke to the 87,000 agents that they're going to be hiring. And I know from a media standpoint, they've really kind of tried to act like we're not going to audit the middle class and that sort of thing. But I think most of us know that that's probably not true. And I haven't had audits very often at all. But I haven't had audits hardly ever, actually. And in the couple instances where I have had audits, they've been pleasant for the most part. But in the past couple months, I did have an audit that was not pleasant and is actually heading to appeals right now because it was not pleasant. And one of the things that they ended up saying is they said, make sure that you end up giving us, they wanted something. And before we could even answer, they threaten us and they say, don't even think that you could try to create something either, because we'll subpoena your computer and look at when the document was last edited. And you're just kind of like, like, getting a little crazy there is kind of where I was kind of going with it. And I'm like, oh boy, if this really is kind of like how this type of stuff is going to go, we need to have our guard up. We definitely need to have our guard up. So I just want you to be aware of that. I don't think that that's normal. I think we just kind of got a really bad apple in my experience. But with them hiring new people and all that sort of stuff, I mean, like, they're not going to know as much as we know. So it's going to be interesting. It's going to be really interesting how all of that works out. But I can't emphasize enough, compliance is super important. And I was talking to a business owner earlier today. I understand that these little things that I'm talking about are tough. Like, keeping a mileage log is very irritating. I hate it. And it is difficult. Keeping all of your receipts is difficult. And I understand that, but the IRS is going to disallow deductions if you don't have receipts. If you don't have a mileage log, they're going to write off. They're not going to let you deduct your auto expenses and that sort of stuff. So, we do have to have our guard up, which, Garvin brings up a good question. He goes, do you have an app or a software that you recommend for mileage tracking? Really, the only one that's out there that I think, well, there's probably two, but like Mile IQ is good. It's good for tracking. I don't love the functionality of the app, but this is called Mile IQ. And so I know a lot of people that use Mile IQ. That's definitely one. And then one of the bookkeepers was telling me that QuickBooks has a mileage tracker that you could work through. And I haven't used it before, but that is something that could be good. I also know one of the bookkeepers had mentioned to me that QuickBooks Online has a good receipt tracker that you could just scan in all your receipts and it'll tag it to your QuickBooks. So I was like, well, that's kind of interesting. And she sent that, but it's funny because she sent that to me like a month ago, and like I still haven't looked at it yet. And so I'm a business owner just like you're a business owner. And so I could totally relate on the little tedious stuff. It's enough for us, to get our bookkeeping done and, just to take care of all our clients and answer all our emails, let alone like now the IRS is coming after us and being nitty gritty and picky about, some little things or whatever. So, I'm just trying to encourage people to look at those little things, focus on those little things until we end up seeing, exactly what we're going to end up getting here. Question says, what documents are needed other than a receipt to expense a laptop purchase that was bought from a personal account for the business? If you have a receipt, that's king. I mean, no worries there. The only thing that I could possibly say that if you, wanted to solidify that transaction a little bit, if you wanted to have your business reimburse you for the personal money that was spent, you'll have a paper trail from the business to you personally on that. And that would maybe be the only thing that, like, maybe you just do an expense report for that. And that would really be the only thing that I would think could strengthen that. But if you have a receipt, one thing that I will say is, like, don't think your credit card statement or your bank statement is going to be enough. That won't be enough in a lot of cases. But I also do want to emphasize, too, that maybe the IRS maybe won't go through every single expense and ask for every single receipt. What they typically do will scroll through and look for the big stuff. So they'll want the big items. So, like, if nothing else, what I would say is keep them for the big items and make sure that the significant expenses that you have that stuff. But if you have a bank statement, you got a receipt, and maybe you did an expense report for something that you paid for personally, you'll be nice and set up for that. That'll put you in a good spot. Great questions. I'll have to check out that Hurdler app. That's something that's a good suggestion. And I love that you ended up putting that suggestion in, because that's what this community is about. It's about going through and getting enough people who are coming into these types of meetings like this and giving each other suggestions on things that have worked for them. I've had this community before built up to where there would be 500 people on a stream like this. And when you get that kind of community who, are all kind of doing the same things and that sort of thing, you get people who are now helping each other. And so that's what we're going for on this. We're going for a big community on it. And that's something that I'm emphasizing. All right, let's talk a little bit about tax planning. I started today recording videos that are going through all my different ideas for tax planning. I have a list right here of all kinds of different ideas that I have that I typically will talk to people about. It would be income shifting, like deferring income and accelerating expenses, doing Roth conversions, stock loss harvesting, bonus depreciation, how to write your vehicle off, retirement contributions, health savings accounts, talking about tuition credits for college, talking about cost segregations and conservation easements, all kinds of different stuff. There's a laundry list. I literally will say that when it comes to tax planning, there's something for everyone, and it just depends what kind of business you're in. If you have an S or a C corporation, you get a lot of business deduction type flexibility to go through and kind of control your income. And so, having these calls and having these discussions is really important. But what I'm going to end up doing is a couple things. For everybody in Prosperity Society, I'm going to end up recording like 20, 25 videos that are just 5 minutes that are going to go through and explain these topics. And people who, it's going to take you one day going through the rabbit hole and just, taking some time to learn. But, as you go through these kind of ideas, you're going to say, okay, you know what? Some of this stuff doesn't really apply to me, but I really liked what you said about a Roth IRA conversion. Maybe now's the year to do that. And then what we do is we schedule a call and we go through, the ins and outs of that Roth conversion, how much you should do, when you need to do it by, and all of that sort of stuff. There will be a list, Ray. There'll be a list that I'm going to go through because how I'm going to do that this year is tax planning for anybody who's part of Prosperity Society is just going to be part of Prosperity. There's going to be no charge. It's just going to be part of what we do. And the time that I'll spend on that is not going to be a cost to anybody. For people who are outside of Prosperity Society, there's going to be a charge, and because they're not going to be able to watch all the videos, and if they're not able to watch all the videos, then I've got to hop on a phone call with them and explain all the ideas based on their situations. And so, being a Prosperity member is going to be a big time value add, I guess is where I'm going with that. And so there will be a list. I'm going to send out a list after this because, not everybody's been able to join this call, but I will have a very large list that has what all these videos are. And over the next week or two, these videos are going to be uploaded to the Prosperity Society website so that you're going to be able to consume that stuff and then schedule time with me. with no deadlines right now between now and the end of the year, and really probably more like December 15th, like over this next 5-6 weeks, that's when we have these. I have so much time to be able to just schedule these calls. And so there's going to be a lot of there'll be a lot of flexibility for that type of stuff for you guys to have these calls and make sure that we're adding value. This will pay for the cost of the Prosperity Society over and over again. I have no doubt about that. If anybody feels like they haven't gotten something out of what we're doing, feel free to reach out to me and I will make that right. But yeah, like there's just going to be all of these various topics. I'm going to talk about a couple of my favorites right now this time of year. I love talking about charitable contributions. Charitable contributions are a itemized deduction. So in order to get a benefit from a charitable deduction, you have to itemize your deductions. And as you know, a few years ago, they raised the bar on those itemized deductions to where it's like around $25K now if you're married. You have to get over $25K before you start getting any benefits from charitable donations. But there's a couple tricks of the trade when it comes to charitable donations. The first one that I'm going to talk about is called bunching. And what that is let's say that you're somebody that gives to charity on an annual basis. But let's say that your mortgage interest, your property taxes, and your charitable donations only come out to, let's just say for round purposes, it comes out to $22,000. So you still take the standard deduction. Now, let's just say your mortgage interest was $6,000, your property taxes were $6,000, and your charitable deductions are $10,000, and that's how you got to the $22K. One of the things that I would suggest that you do is, instead of making a $10,000 charitable donation each year, what I would say is in year one, don't give that charitable deduction, and then in year two, double it. So what you've done is you've said, okay, instead of going $10,000, now you've went 0 and $20,000. What this ended up allowing you to do is go, okay, I'm just going to take the standard deduction of $25K in year one, and then in year two, I'm going to end up with $20,000 in charitable deductions, $6,000 in taxes, $6,000 in mortgage interest. So now I have an itemized deduction of $32,000. Hopefully that kind of makes sense to you. So instead of just taking standard deduction each year, $25K, now what you've done is you've went $25K and then $32K. All right, so that $7,000 spread that you ended up getting, if you're in a 25% tax bracket, you just ended up saving yourself a couple grand. So that's a solid one that I love. Is charitable contribution bunching, where and your numbers need to work out on that. You kind of need to look at your numbers on that. But for certain people, I've had people where instead of getting $25K and $25K, they get 25 and then they'll get $40,000. And it just depends how the numbers shake out. But that's a way that you could save a couple $1,000s on your tax return if the numbers shake out the right way. The other thing that I love is, and this is something that it's possible has been pretty prevalent over the past couple years, with the market being down now, maybe not as prevalent. But if you are somebody that is charitable and donates frequently, donating appreciated stock is such a solid tool. And when I say appreciated stock, that means I bought Google 5 years ago for $1,000 a share. Now it's $2,000. Well, it just split. So let's just say, I bought it a few years ago for $100 and now it's $200. If you were to go sell that stock for $50,000, let's say, you sell the stock for $50K, you're going to pay tax on $50K. If you go give it to charity, that could be fine, but how the numbers work out, it may not work depending on itemized deduction type stuff. So you don't want to sell something, increase your income, and then have a corresponding itemized deduction. What a lot of organizations will do will let you donate the appreciated stock. What you end up getting is a fair market value charitable donation for the amount that it was worth. So, and you pay no tax. So you don't recognize a sale. You give an in-kind donation, you get the fair market value of that deduction, and then the organization that you donated it to, they turn around and sell it for the amount that it's worth at the time. You end up getting the fair market value deduction on your personal tax return, and you didn't even have to sell it. So that one's that's a double whammy one that works so good. You just have to donate to an organization that accepts in-kind donations. So donating appreciated stock is such a cool tip that we can implement. Let me get to a couple questions here that are in here. So if you want to take $50,000 loan from the solo 401k, the IRS regulation says that it must be paid back within 5 years. Can the loan be termed for 1 year, and can you take $50,000 at 7%? Yes, and pay it back in equal payments over the year. There's no prepayment penalty from a 401k loan. So yeah, you can totally do that. And speaking to 401ks and taking loans and all that kind of stuff, that was something that we did a lot of consulting with over the last 2 years, with the CARES Act, with taking if you were affected by COVID, you were allowed to take money out of your 401k and pay it back over a 3-year period. This is like what staying on top of things really is valuable for, because that was a good opportunity for people to do some things with that money. But great question. You can pay it back early, no problems with that. Let me talk about a little bit another one. Let's talk about a Roth conversion. As you guys have probably heard, Roth IRAs are a home run. If you're high income, you can't really contribute to them without doing like a backdoor type thing. But when it comes to a Roth IRA and having an ability to maybe move money from your traditional IRA into your Roth IRA and not get dinged too hard when it comes to taxes, that could be kind of a cool opportunity if you were invested in a lot of tech stocks. Tech stocks have gotten really destroyed this year and are down 50-70%. If you're a believer in those popping back up and your Roth IRA is down right now, it might be a really good time to convert your traditional IRA is down right now. It may be a good opportunity for you to convert your traditional IRA to a Roth IRA. And what I would say to that is you're always going to want to make sure and have that conversation. But if you're in a specific tax bracket, if you're in a lower tax bracket, converting your traditional to a Roth may be something that you want to bite the bullet on and pay some tax on, because it grows tax free. And at retirement, you can take it out tax free. And having those benefits is something that is really cool to be able to have. So Roth conversions is something that I talk about with a lot of people. If you're in a really high tax bracket, and this is something that I talked about with a couple clients recently. If you're in a high tax bracket and you wanted to do a Roth conversion, you would probably need to pair that with another tax planning strategy that would reduce your overall income. And so, that is a consideration that we would definitely want to look at. If you're like, hey, I want to take advantage of this traditional to Roth IRA conversion, I'm willing to pay some tax right now to be able to do it because I know in the long run it's going to save me a bunch of money. So Those are a couple of the things that, we're going to go through in a little bit more detail. A couple of the other things that are going to be on the list is, how estimated tax payments work. I want to review all the itemized deductions that are out there. I want to talk about how to buy business vehicles. I'm going to go through all the different types of deductions that are out there that you may be missing. We're going to talk about payroll and how payroll is an important compliance measure that is out there right now and something that's an easy target for an audit. I did a video on accelerating expenses. We're going to talk about paying your kids and how that could work out through your business. So there are just a lot of tools like that are available right now that we're going to be loading up into Prosperity Society and making sure that you guys are on top of all of it. And like I said, emails are starting to come in where it's, hey, can I schedule time with you? The flexibility for my time is there right now, so feel free to reach out to me to get on my calendar and all that sort of stuff. But more importantly, I'm going to send out an email today that's going to break down the value add that comes along with Prosperity Society and really what we're trying to accomplish with this platform. And so, like I mentioned, I hope everybody's caught the vision of this. You guys are going to love what's in there. And I feel like going forward, this is kind of a future for us, for sure. So, if you're listening to this and you're like, hey, I don't really want to subscribe to Ronnie's platform, and I don't necessarily like where he's going with it and all that sort of stuff. I mean, I totally understand. I want to be a good fit for everybody that I work with, and so that's something that makes sense to me. But we're committed to it. Let's take the last couple minutes to just put some questions in there. Foley, thank you for joining. I actually was wondering who FST was. I was trying to put it together and I didn't get it together. But Foley, I appreciate you. I appreciate you a lot. Thank you for being here. And I look forward to our call that we're gonna have. And but if there's any last minute questions, feel free to post those into the thread. If not, I'm going to jump off and I'm going to take my daughter to the chiropractor. She broke her leg about 4 or 5 months ago and is getting a little rehabilitation. But you guys are the best. I appreciate you guys so much. And, thanks for the time today and everybody kind of jumping in. And but if there's nothing else, I'm going to wrap it up.